All right, welcome to The Explainer. Today, we're going to try and solve a real puzzle. This feeling that we're all living in two completely different economies somehow at the exact same time.
So, you see all these headlines screaming about a booming stock market, right? Indexes are hitting record highs, but for so many of us, that feels like it's happening on another planet. Our own financial situations, yeah, they're not exactly soaring.
So, how can both of those things be true? It's a super confusing contradiction. If the market's doing so well, why doesn't it feel that way for so many people? Okay, let's get into it and actually unpack what's going on here.
The key to cracking this whole puzzle open is this one concept economists have. They call it a bifurcated economy. Now, I know that sounds kind of complicated, but trust me, the idea behind it is actually pretty straightforward.
Bifurcated at its core really just means split in two. So you can think of it like our economy is running on two totally separate train tracks. You've got one track for Wall Street, and it is just flying down the line full steam ahead. And then you've got the other track for Main Street, and, well, it's kind of struggling to even leave the station.
And this isn't just a feeling, it's a real measurable thing. As the well-known economist Mohamed El-Arian put it, there's a major disconnect here. And he says it became super clear after one specific event that changed everything.
So to really get how we ended up here, we have to go back in time. We've got to rewind to the 2008 financial crisis. That was the moment that really redrew the whole economic map.
So right after the crash, the U.S. Federal Reserve had to step in, and I mean step in big time, with huge interventions to stop the entire financial system from just melting down. And those actions, they were so powerful, they kicked off a chain reaction that basically defined the next 10 years.
Okay, so the Fed's main weapon of choice here was something called quantitative easing, or QE for short. Now, what does that mean? In simple terms, they basically pumped enormous amounts of money into the financial system. And listen, it worked wonders for boosting asset prices, stocks, bonds, that sort of thing. But, and this is the really crucial part, that money never quite made it down to the wider economy. And that created this huge massive gap between Wall Street investors and regular everyday workers.
And wow, this chart right here, it just tells the whole story, doesn't it? I mean, you can see that gap in such stark visual terms. Just look at the insane growth in the S&P 500 and the NASDAQ, and then look at that almost totally flat line for median household income. It's the perfect picture of just how much faster Wall Street bounced back compared to Main Street.
But look, this isn't just some history lesson. This exact same split, this same dynamic, it's playing out as we speak. And one of the clearest places you can see it right now is in the job market.
Yeah, analysts have even come up with a name for what we're going through, a jobless boom. It's a really weird paradox, right? The big top-line economic numbers, they look pretty good, they look resilient, but actual job creation, it's practically ground to a halt.
And get this number, just to put it all in perspective. In a recent full year, the entire economy added only 584,000 jobs. Let me be clear about that. That is the weakest year for job creation in over 20 years, if you don't count the pandemic. The forward momentum, the engine of the American workforce, it's pretty much stalled out.
And if you look closer, you can see that the job market itself is split in two. This slide just lays it out perfectly. All the hiring is basically happening in what they call defensive sectors. Think healthcare, hospitality, the stuff people need no matter what the economy's doing. But then you look at the cyclical industries, the ones that really depend on a strong economy, manufacturing, construction, retail, and they're actually cutting back. They're shedding jobs. So what does all this add up to? Well, experts are calling it a low-hire, low-fire environment. What that means is companies aren't doing huge layoffs, but they're also really, really hesitant to hire anyone new. So even though the unemployment rate might look low on paper, that feeling of opportunity, of being able to move forward in your career, for a lot of people, it's just gone.
Okay, so what's the bottom line here? What's the big takeaway? Why does understanding this whole bifurcated economy thing even matter to you?
Well, it really all boils down to this. You just can't take those big headline numbers at face value. This whole split proves that the stock market is not the economy. It shows us that big policy decisions can have totally different effects on Wall Street versus Main Street, and that even the job market is a tale of two completely different worlds. Knowing this lets you look past the headlines, so that the next time you hear someone talking about the economy, you'll know to ask the most important question of all. Yeah, but whose economy?
And that leaves us with one last, pretty challenging question we have to think about for the future. As this disconnect just keeps going, you have to start wondering, is this two-track economy, one for the top and another for everyone else, is this just the new normal?